Good morning, everyone, and welcome to the European crossover webinar. And we're obviously seeing some pretty good little downdrafts here in the equity markets, and that's what's spooking things. We're seeing the yen strengthen here, and a couple of markets that you want to look at, keep an eye on. Blake even mentioned it yesterday, and I've been keeping on it. I posted the chart in the chat room in the afternoon. Is you can see here in the peso, it actually was sitting on this edge of this trend line, and now it's starting to move higher as we're looking for potentially for the risk aversion to go on and continue to move higher. I'm surprised it actually hadn't even tried to move higher from then, and right now we're seeing the yen strengthen itself, coming into some very key levels. One of the things that I was gonna had mentioned, and I posted on there all about the levels, is that this is not the time necessary to be worrying about fibs. Fibs, you know me, I love to use the fibs. But when we get into these turbulent markets, it's all going to be about the levels, and the levels, the way, as you know, I put my levels through the body touches because that's where the volume is, and essentially that's where the market will gravitate to. So if they're going to find support or resistance or whatever, it's going to be at those levels, and that's what you want to hone in on. It's okay to see if you can get if you can get a confirmation with the fib, but I think right now is you have to go in and keep an eye on your levels per se. Now we are hitting some key levels here in the yen, and I mentioned also the euro yen. And if we look at the daily, let me swing into that real quick before we get into the news. I'll give you a reference of what I'm talking about and where I'm coming from on this. Hang on a moment. So here's the euro yen. Okay, I picked it up right down there at 62. I'm just going to try and grab a quick scalp off of that. If it drops a little bit lower, and we are seeing some pressure, I can always just jump out. Now I forgot who was asking me. Oh, it was Jay who's saying, "Hey, do you think you're going to see?" We can't see 22.8. Yeah, I think you can see much lower prices. You have to factor that in. I think that this is one of those times where the market's acting that if, and like I said, I'm just hanging on, just going to see if I can get a quick scalp off of this key daily level. We'll see what happens in here, but we're seeing the British sterling versus the yen come under some pressure. And I'm just going to try and grab just a little bit off of here. But look in here on the daily here. Hang on a moment. You can see this area is very important right in here. And so we may see the market try and push up a little bit higher. If not, I'll just take a quick little hit on it. But like I said, I saw some talks about there being some support before then, and this is what you want to gravitate to. Now, I think that what we want to do is we want to prepare for the worst. Actually, like to say the old saying, hope for the best and prepare for the worst. And so I think that that's the way you want to go and approach this market. Now, right now, the S&Ps are a little bit off their lows, and right now is the time where the market's really pushing into these risk aversion. So you're seeing them press them as far as they can, and then by the time the U.S. session comes up, we may see this going and pop up a little bit. Okay, so we may see this come off of these lows a little bit because then they'll be thinking, okay, well, the talks are going to start. And it's not so much that I don't think everybody's buying into it, that it's so positive. I think that the deal isn't going to get done if you ask me, but for different reasons. But what I'm thinking is, like I said, we've come down here. If you look at where we are right now from a trying to think of the right thing to say, right, the right way to say, we're at the worst moment right now. The New York hasn't even opened. There's no talks yet. The talks or whatever is going to happen a little bit later on. So we're pressing into a pretty key daily level right now. So if right now it's about as bad as things can get. So you would think that as you come into this level, you probably see some short covering. And then by the time New York opens, we make it back up here to, well, I want to say 2364, but we make a good little jump. Now we're looking on a daily right now, but that's what I'm saying is, but I think what you have to do is you have to go in and prepare for the worst And I think that, and so right now, I, grab a few pips. I'm gonna just probably jump out in just a few moments, let them see what's going to do. I think I'm not interested in hanging on for a longer move. If it was, I would hang on much longer, but I'm just going to grab a little bit, take it off the table, and then run away. Okay. So, but like I said, and you see, we've already made a couple little dips here. If you're looking like on a minute chart, see, we're already up 70 now. But like I said, I think that that what you have to go in and look at is that, yeah, see, we're still moving higher, is that we're in a time right now where it's pressing about as bad as it can get. Okay. But the way I'm looking at it, and just to reinforce that again, is me, I use fibs a lot, but now, like I said, seems like I'm babbling, going all over the place, but here's what I'm trying to say is, you want to, I think the way I'm looking at it is, you want to pick I don't want to say an approach, but you want to go in and the way I'm looking at it, pick a playbook, and I jumped out at 70, but pick out a way that you think may or may not happen. Okay, it may happen, and I would go with that. And so my take is, I'm going to go with the idea that the talks aren't going to make it. Okay, and I think that we could really get flushed pretty good. I picked this one up on a scalp, made a few bits, not a whole lot, but here's the deal. There's no way in heck, at least from my perspective, do what y'all want, is that no way in heck that I'm going to be catching any falling knives over the neck, from here on out. Okay. So when, what's his name, Jay said, hey, can we get to '08? Yeah, I think we can get to '08. We're going to focus on the S&Ps and see the levels that they can potentially get to. But it's like I said, what I'm going to be focusing in is on the levels. I'm not going to be worried about the Fibonacci. I'm not interested in the Fibonacci at all today. Maybe on a pullback you can see, but I don't think that. I think today it's going to be the potential over the next couple of days for them to press lower, and press lower they will go. And it's, once again, I posted this much earlier in the chat, and I said, hey, look, this is the area where, the target of support that I thought we wanted to go to, which was, it was what, about, I think at the time the market was trading like about 25 pips higher or whatever. It's going to gravitate to these levels. So it's all about the levels. And I would not be focusing on fibs at this time. I don't think today's a day to be, today or tomorrow's a day to be focusing on fibs. I think it's where the market's going to go in and push it for all it's got, and basically is get the heck out of the way. You see what I'm saying? Think of it as a locomotive heading your way. And on a day like today, where there's a potential for these talks to fail, and me, I've been saying that the boy, a lot of other people have been very, optimistic or whatever. I've been saying it's the boy who cried wolf, the boy who cried wolf. I've been, if there's anything more revolting or repulsive than the Brexit stuff, has been this China trade stuff. It's not coming, folks. And so, and I even thought, well, maybe it's coming around the corner, or like that. I just don't see it, but it's honestly set up for an opportunity to fail. And with Trump laying on his threat about the tariffs, to me, if I'm China, and I'm just giving you my 2 cents, if I'm China, then if I come, which they did, I think that they're playing into it in the sense of, we're going to come, we're going to show I made the good effort, and I don't think they're going to give in. I could be wrong, but to me, it looks like they're a punk then if they go on and acquiesce to Trump's threat, because Trump's going to take all the credit and say, oh, I did all this, and yeah, I threatened them, and I made them come to the table. And I don't think China's going to play that way. China's going to say, okay, well, for the show, Li Hu is going to show up, and then they're going to say, well, we couldn't reach a deal, and then that's it, and let it fall where it may. And I think they're in a better position overall, and then letting this deal go by. So we'll see what happens. But whether that comes to fruition or not, I think you have to have a playbook, and that's what I meant to say. I think you have to have a playbook, and my playbook is that this thing's going to fail, and you want to press it and play it to the downside. So, I mean, I did pick up on a scalp, and fortunately, I was able to go and jump out real quick. Although I think we're going to be much higher by the time New York comes in. But my take is, and looking here at the year end, you want to focus on targets to the downside. That's what you want. And devil be gone with Fibonacci. You don't want, this is not the time, I don't think, I'm just giving you my 2 cents. Say, okay, well, here's the percentage here, I'll buy them here, whatever. No, this is a time when you're gravitating towards levels. So when, what's his name? I think it was Jay said, hey, don't you think they can make it to 128? Heck yeah, I can think of making 128. The next support level I've got in here, it comes in at 2092. And once again, I'm just looking at the levels here. And you see here, what I do it, and once again, just so everybody's aware, instead of me going with the high and the low, I always go with the body touches. So look at all these body touches. And this is on a daily. So that comes in at 20, look at that right there, 2092. So if we fail, I think you want to err to letting this play to the downside. And let's say it doesn't, let's say it stops at 2108 and starts coming back. Okay, fine. But I would not be picking up anything on the downside. Let this market get smoked or whatever it wants to go and do. I think we're a little bit stretched here. The only thing is like here with the sterling units pushing hit here. I'm glad I already scalped out, but I think that we'll be higher come the New York session. We'll go on and get into the rest of the charts, but I thought this was a good example to tell you how I'm gonna go on and play these. Is I'm looking for downside targets as far as levels, and devil be gone with Fibonacci, because I think this is all about where is the volume where it comes in, where people say, okay, I'll cover right in here because there's support right there. Okay, so let's go on and move into the main chart, and we'll cover the stories. And let me jump into that. Hang on. I think, as I said, I can't say it enough. I think today is a day that you have to have a playbook. And I think the playbook, at least the way I'm going to do it, is today I don't think is a day that you play both sides of the market. Now, it could be that maybe they do reach a deal, but in the meantime, the market is going with the idea that the probability is that they don't make a deal, and it's going to press it for all it's got going the other way. So I'll give you an example when I say taking the other way. Let's say I'm thinking, and we'll hurry and get to the analysis. I think it's more important to think about where we are for our mindset. PM89, Pedro said a good thing, because I don't see anything going to be new for any new ideas in FX. He's right. Because I think today it's all about, hey, how far can we press these risk on and risk off assets? And but today I'll give you an example. So if we get up here to 1920, I'm like, oh, well, you know what? That's a pretty good level. I'll take the other side and see if they dip. Oh, heck no. For one thing, we're breaking out of here, and I think today's not the day to be playing the other side. I think today is a day where you go, well, at least for me, that's the way I'm going to play it. You go with the direction they want to go in, and you don't fight it. Because if they break 1920 here, let's say I took a short here and I go, well, that's a pretty good level. That's good, nice little solid level. If I break 1920 and it starts getting above it, I'm going to have to jump out. I mean, I might say, oh, well, here's 24, here's 28. I'm pretty sure it's going to run out of gas around 27. Oh, my goodness. You're not going to be able to stand the way. And that's what I'm saying is don't stand the way. That's going to be my approach. Today it's going to be as far as a game plan on how we approach it. And our focus is going to be on daily levels, where the market can potentially get to. Let's go on and jump into the news real quick. We'll touch on that, and then we'll get on to the analysis. And then we're going to be looking at the S&Ps. We're going to be looking at those levels, and you need to write those levels down, because it's not only for today, but it's tomorrow, and how far these markets can go in and crack. And once again, the best advice I think I could use is, don't try and catch a falling knife. Don't try and stand in the way of the train. Lots of times I do that, and sometimes I can, catch a few pips. I did right now with the euro yen. Right now it's on its lows at 58. It could break a little bit lower. I don't think it's going to break a whole lot much lower. Okay, but that being said, today's not the day to be taking the other side. I did right now because I thought, okay, that's a daily level. It's still early in the day. I think we'll get some bullishness. Like I said, I wouldn't be surprised we're up in the upper 80s by the time New York rolls around, but we shall see. But let's go on and move into the news quickly. So EU ponders post-Brexit challenges, European English. Okay, I'm not even interested in this stuff. That's just I'm not interested. Okay, let's go straight into the business of the day. Markets took take a sharp intake of breath as the latest U.S. tariffs go down to the wire, with U.S. President Trump insisting China broke the deal, and Beijing already lining up retaliation to Washington's promised hikes and tariffs on $200 billion on Chinese goods. Well, we already know about that. Vice President Liu He is en route to the U.S. Capitol for last-ditch talks. There's little or no time now to address a huge range of issues listed by the White House as reneged commitments before the tariff deadline is reached at midnight. Look, I think China's just making a good faith effort to show up, but I don't think anything's going to get done. And the market's precedent, and like I said, we've already talked about that. I think we're going to take a look at the S&P. When you look at what the S&P is going to look at, and we talked about this, and I mentioned it on Face a couple of days ago, was like, when you look at where it's at, why the heck would you take a chance? I don't care about how much optimism there is. It's a coin flip at best. And now does it even look like a coin flip with a two-headed coin? You know what I mean, where you see, heads you lose, tails I win. You know what I mean? It's like it's not going to play your way. With Wall Street ending in the red late again, to S&P stock futures dipped down 0.6% first thing today. The fear trade has seen Japan's safe haven as yen strengthened further below 110 and hit its best levels in over a month. Yeah, the dollar yen is also has already reached a key level. We'll get that. I think it might have exceeded it just a little bit when we came on air. I think it was right at our bias chart support from yesterday. That inevitably sowed speculation about China's take-up of the auction and the renewed trade tensions, or at least behavior fearful of Beijing using its clout at treasury auctions, where it's typically a large player. And this is what I mean, like, okay, so there's concerns about that too. I think it's going to be full on blood guts here. And I think it's going to be all over the place. And that's what I'm saying is go with the moves and do not try and stand in the way. Do what you want. I'm just here to go and provide you the levels. But I think it's important today to have a playbook where you have, and I don't think it's a playbook where you're trying to trade on both sides. I think it's a playbook we say, okay, this is what I think is going to possibly happen. I'm going to steady myself or prepare myself for levels going in that direction. I'm not going to fight it. And if it plays out, fantastic. If it doesn't play out, okay, well then it didn't play out. But that's my playbook. And I think because these moves could potentially be big, I would not want to be on the other side of these moves. I would just go with the moves, and if they don't come to fruition, okay, they didn't. Or you end up leaving money because on the table because you try to let it stretch to the move. Find out what you want to do, but I think that at least that's going to be my strategy. And like I said, I kind of deviated from that strategy as I stepped in and scalped a little bit off this euro yen. It's now at 62, but I would expect it to be much higher once we get into the New York Open. But like I said, afterwards, I think what's his name was right when he said, do you think the euro 10 can get to 22.08? Yeah, sure as heck. We're going to prepare for those type of moves. Now let's go into the Aussie dollar. There's another story. We usually only have one FX story. The reason I think I wanted to push this one here is because it's also going to be important what happens with the Aussie dollar, New Zealand dollar, because once again, risk off. So the Aussie New Zealand dollars were under pressure on Thursday as President Trump kept up his war of words with China over trade. Think of it this way. I always talk in analogies. I see things in analogy. So, think of it this way. You're coming to your friend's house, your next door neighbor said, hey, I've been wanting you to cut this bush down, and you haven't cut this bush down. Okay, it's the U.S. and China. And you're supposed to go over there and discuss it with the neighbor. And the neighbor's already said, I'm calling the zoning commission. We're gonna get a $750 fine against you if you don't cut that bush down. So the guys raised the chips against you. Okay, so now you're gonna go over there, and like I said, to me, it's just like as if the water's been tainted now. You see what I'm saying? So if China goes over there and acquiesces, it's almost like they're a punk and they gave in. And I don't think China's going to go and do that. Now, like I said, they may end up doing it, okay? But once again, my play on is I'm just going to play it from that side. And I think the market's pushing from that edge too. China is Australia's largest export market, so anything that might dim the outlook for Chinese trade is taken as a negative for the Aussie. If the government applies a 25% blanket tariff on all Chinese exports to the U.S., we estimate the direct economic hit to Chinese GDP would be around 0.4%, said Joseph Capurso, New Zealand dollar east to 65.73. Let me see forward cash rate. We remain a bearish Kiwi view relative to the G10. Blah blah blah. Well, let's move to the last story, and it's very very short. Dollar stays near a 6-year low versus the yen as China trade talks awaited. Markets were nervous. Yeah, we know already that. Japanese currency has advanced against a number of peers and tends to attract demand in times of political strife. We already know China's broke the deal. We already know about that. According to CFTC, speculators have raised their net long dollar put bets. This is another thing we have to focus in is what we're going to be looking at today. And today's different from most days. And it'll be different into tomorrow is where some of these markets can stretch to. And that's what we're looking at. So it won't really be about the intraday levels as much as it's going to be levels where these markets can potentially get to today or tomorrow, into tomorrow. The trigger for a reversal in dollar longs against the yen could be the U.S.-China trade talks. Fed taking a dovish tilt on North Korea. Missile experience, says Daisuke Karakama. Of these, the likely candidate is a heightened rate cut expectations, as it's no secret that Trump wants a dovish Fed. So let's go move into the analysis. Look how euro yen still hanging around its low. So let's go move in. Let's get into the euro. Well, this thing is about as dead as a doggone doornail. And one of the reasons I ended up moving more towards cross rates because this market is about as dead can be for the most part. Where can we potentially go to? Well, the trigger here, if we're going to break it and it would work as a trigger, is going to be 1130, and we can potentially go in and break lower if things get real risk averse. That's what we're going to make a run to is 1130 for now. So let's pull up the old bias chart. Upside is very, very limited. As I told you, we'll look on the upside. You know, I'm going to focus on this as more as a pivot. My take is just like I told you. I think today's different from all the other days we do. We, looking at, well, here, if we got here, we'll show a little bit of support here, blah, blah, blah. Look, if things were to get, turned kind of bullish or whatever like that, or risk on, they could maybe make it up to about 1280. That'd be the first push. Okay, 1262 is important. Probably see a pushback. We'd come back in, but that's not what I'm focusing on. To me, the key level is going to be right there. 1229 still remains the same. I feel that the euro is going to, potentially the way these talks are going, my take or my approach is this: if we end up breaking down, the bias. We're actually still pushing into these lows in the S&Ps. I don't want to say the bias, but I guess it is a bias. Is is for the outlook of these talks for them not to go very well. So I think the upside is rather limited. And if we get past 1229, it works as a pivot. And I think here's the deal: if it gets to 1229, you're going to know why it's at 1229, because all of a sudden the talks are, and be careful with rumors too. You could get rumors where they say, "Oh, talks are going well," and you might see a spike up. Well, this is where I think they'll run out of gas. We see something like that would be 1229. So I think we already have that. There we go, 1229. We'll keep this as still bullish, although I don't think that makes a hell of a beans right now. Today and tomorrow just completely different type of situations. And I think that the euro would have been bullish, okay? And I think we start out the week, we had the potential to move higher, but the dark cloud that is hanging over us right now is this U.S.-China trade talks, and it doesn't appear that it would go very well. Let's go and move into the cable. Well, this one, really, I mean, it failed like a North Korean missile launch. I mean, my goodness, it just turned around and fell all the way right back now to the pivot. We're gonna look for a move down here potentially down here right there to 28.95. Long ways away, but you know what? We're going for the where can we break to? So hang on. And like I said, same thing. You can see here, this fib, that fib. Look, I think I can't say it enough. I don't think today is a day to hang your hat on fibs. Okay, if the talks go bad or whatever, we get breaks. It's the market's going to probably meander around, and I mean some of these other pairs. It's like I do see the euro yen breaking a little bit lower, but it's not of any real significance, I don't believe. But anyway, I think if we break them, we're going to break them good. That's my take. And so that's what I'm saying. So we're looking at 28.95. On the upside, we'll take a look at the 2-hour chart. It's going to be right there, 30.43, 30.43. Yeah, we've already pressed below. We look on the euro yen. Here's 20. Looks like I'm glad I got out with a few pips because I would have already I would have bailed because I don't, once again, I'd be taking the others, going against the grain, but I think that's a good area here. But here's my take once again, be careful. I would not be standing in the way, catching any falling knives. Today's the day where you just, I forgot what's the name said it right, which is, hey, do you think it can get to, Jay said, do you think it can get to 22.8? And remember, we've got, I think we've got a number there, was it? I think it's 21.95 on the next daily level that we go to. That's where you want to play it, is where the market will act as a magnet towards these levels. Okay, I think we'll still pop up before then, but I'm saying is I think that's important. If there's one thing that I can share with you, I think is going to be, it's important, is don't try and catch any falling knives. Don't try and stand in the way. Focus on the levels. And let's go and move into the Australian dollar. Well, look here, we're blasting away lower again, and we're just about here at the 61% of this entire range, okay? And you're saying, well, wait a minute, I thought you said not to pay any attention to any fibs. This move happened so fast that just don't have a real good level to say in between. I've even broken it down before on how about looking on a 30-minute, looking on this, it rebounded so fast that this was the only thing I could hang my hat on. And this level I've had here for about, I think about like 3 weeks or something like that. Thinking, okay, if they get down there, this is just a target that I think, once again, not that you buy it, is a target that probably try and move lower here too, and then the market may hold its own. But what happens after they break? Man, I don't know. I'm not sure how far that they're going to go on and try and push beyond that. If they do, my guess is they try and move down to 69 cents. For right now, it's going to be, and it's going to work essentially as a pivot, is we're going to go and say, okay, 69.50, maybe they take out the stops a little bit. So let's just go with 69.40, 69.40. But that 69.40 is just going to really only work as a pivot. Look, it's going to be all bets off. If that breaks, this thing is going to fall like nobody's business, and probably your first real stop is going to be probably around 68.50. But think of it as 69.40 kind of working as a pivot. They may gravitate, push the stops a little bit, so we'll go with 69.40 for right now. That's a good example right there. This one is that Blake might have mentioned that about that yesterday. He said, if the talks break down, then you sell risk, just completely sell it. And that's what I'm saying, is you're better off in a situation like that. If the talks go off, hey, let them, you're short and saying, okay, let's see if we get to 68.50. It may even blow past 68.50. You just hang on and do not be, once again, I can't stress enough. I would not be trying to say, oh, that's a pretty good level. I think I'll cover and I'll buy them on any kind of a little bounce. You may see a bounce of a couple of pips and the bottom falls back out again. Let's on the upside. It's going to be that key 70.27 that's been, we've had, oh, there it is, 70.27. We still have it there. We had that number in there for a long, long time. So let's go on and put that there. If we were to get a rebound, you might, and here's where the rebound is going to come, I believe. And once again, I think you have to have a playbook. You know, when we do the bias chart here on the European crossover, it's basically to, provide you the support and resistance. Basically, to a certain extent, they're scalp levels, but they're not scalp, but they're for intraday levels, okay? And you can incorporate that into your own strategy. Maybe you're looking to hold a position for the next few days or next couple of weeks. You might say, okay, that ties into where I'm going to be getting short at or initiating the long or something like that. But like I said, today is completely different. Today's about, hey, where are some of these stretch levels? It's almost like think of it this way. It's almost the same type of approach that we do, so to speak, like when we see something like the NFP and we say, oh, wow, if it got here or whatever. And like I said, some of these levels, when I mentioned here on the 70.27, to me, just like the euro and to a certain extent the cable, these are going to be, if you want to get one of those fake headlines, announcement to be made soon. Glowing progress. Okay, well, guess what? If they rally up here, this is probably going to run out of gas right there. And then next thing you know, oh, it was a fake headline. And next thing you know, we're back down. We're back down here, 69.50. So that's what I'm saying. When we get one of these fake headlines, essentially that's the way I'm playing it out here, and that's the approach I'm taking. So use it if you use it, or discard it if you think it's a bunch of hooey for today and tomorrow. But I'm saying is this, I think we have to, as my mom used to say, hope for the best and prepare for the worst. And that's what I'm doing. Okay. Like I said, I think that this whole China-U.S. trade talk is the biggest bunch of BS I ever saw. If you think about where the S&Ps are, why would you? I said that a couple of days ago. Why would you take that kind of risk? It's a coin flip at best. And now we're seeing the S&Ps continue to work lower. That bounce we saw on Monday was really just an opportunity for those that were long to go in and exit out of their positions. Essentially, didn't mean they were getting short, but exit out and say, wow, let me just go to the sidelines. Let's go and move into the Kiwi now. Okay, so now we came pretty close. I thought I was going to try and buy this on RBNZ day when it dipped down. I thought we were going to get down to 65.7. I thought, okay, this will be a good buy here if it dips below, and I'll buy the dip below and see if it pops up. Well, it did pop up, but it never. I mean, it got down to like 25, and then from there it just kept going higher and higher and higher, just kept pushing higher. So we're going to go with. We're actually going to move a little bit lower and use this basically once again like a pivot. So if you were to start to see this market break, I'd be going for this 64.98. That's what we're going to go with. And these are basically, I say it again, these are basically going to be like downside target / pivots. Okay, so you play it for what it's worth, and you get down there. On the way down there, as you get short and you're going down there, okay, you can look to cover some of it or all of it around a tag to 64.98. We may even blow past there. We may come up a little bit short of getting to that destination, but those are target levels to go for. On the upside, is going to be right here, 66.42. So once again, if we get one of those fake headlines, there it is, 66.42. Hang on. See, the way I'm playing it, like I said, go with it or don't go with it or whatever, that's fine, is the propensity of these S equities to break lower is so strong that I'm not even going to try and be fancy Dan trying to play the other side. Look, if they get one of these fake headlines, it's going to come in so fast and furious, you barely have time to react. But we do have the upside once again. If it looks like, oh, news is coming in, it looks like the great trade talks they're coming along, and then we shoot up. Then what you want to do is you can observe and say, okay, this is where they expect them to, have the first area of resistance where they, start to falter. So let's say that it blows through here and it gets up to about 66, 67, and then the market starts like kind of losing its steam, like, oh, wait a minute, maybe that headline's a bunch of BS. So then you let's say you get short as we break through this, then you just hang on through there. So essentially, this is the line where it says like, hey, look. This is where we'll probably start to see some resistance now. Obviously, if they really did get a deal, well, heck, this thing's probably going to blow all the way up to here, but and much even higher, then probably 68.20. But that being said, until that happens, yeah, these markets will probably be suspect to fake news, fake headlines. You do get trade desks that don't want to do that. I don't think you get as much nowadays, but it used to happen back in the day. Someone needed a position, would get a position, they just go in and go on the wires and or tweet something out, or they get on the squawker and say, "Oh, we heard this," and next thing you know, the market pops up. It does. I don't think it happens as frequently as it used to, but it does happen. And today, I think would be one of those days where it can happen. And some of those headlines might even be legitimate in the sense that they think, but then it's all a bunch of hooey. But anyway, let's go on and move on right now. Let's get into the Kiwi yen. Okay, so the next key level support, it looks like we may have already touched it right there. Once again, going with the body touches right there. And you see that? 7203. There you go. So we saw a nice little bounce off that area. Now we got below it. We took it out by what? 15 pips, but then we turn around and march right back up here to 37. Okay, at least we went there to 37 and actually moved even higher. It looks like we made it all the way back up to 50. And that's what I'm saying is why I like to, yeah, 50. So that was almost 50 pips on that one. But why, oh, look at that. Looky here. Euro yen at 22.75 now. And like I said, why these dailies? That's what I'm saying. That's what I'm focusing on. And why I'm saying is focus. This is the type of market now you need to focus on the levels. I would not be looking at Fibonacci at all. I would just focus on the levels. And yeah, already Euro yen back up to now 72.75. So on the downside, this one's a toughie right now because once again, there's that day that, and I bet this one was a pretty big. We already saw how it reacted with the Aussie. I remember looking at the Aussie, and I remember trying to parse the Aussie up. Like, okay, now let me look at an hourly. Let me look at a half hour. Let me look at a 15-minute. When we had that move, and the move back was so fast that there really wasn't any good levels you could point to. So once again, we're looking here. The only thing we can point at right now here, the 7183, and it's going to have to work like a pivot. So you break that 7183 and it's Katie bar the door. And your first target then on that pivot would have to be the 71 cents. The 71 cents. So let's just go. Actually, I'm going to mark 71 cents. some of this stuff is kind of common sense. You think about it. Like I'm looking at the euro yen. We did break. We got looks like we made it as low as 22.50. But the thing is when New York opens, it's not that everybody's so stupid and they're all of a sudden you turn on the optimistic clock as soon as New York opens. It's just that at this point, you know that they're going to cover some of those shorts, and hence we get that a little bit of a bounce. So speaking of hence a little bit of a bounce, here we are on the S&Ps, and we want to go and take a look at some of these levels. Now, here's the deal. Let's look at the 2 hour and I go, okay, well, we're pretty well overdone. There's some support here, 28.51. Look, I think if things really get, what I did was I looked over here, and when you look at it now, you think, oh my goodness, we're looking at a weekly chart. Why the heck would someone would have stayed long way up here and did this coin flip China trade talks? The key level, if this thing gets really ugly, is going to be this 25.75. You see the touches coming across on this weekly? We're a long ways away. But tomorrow, who knows? Things get pretty squirrely. We could eventually get down there to 27.75. Honestly, that's not that far away. It's less than 100 handles. Okay. There's another one here, 28.03 comes in right there. That'll be key. But on this weekly, mark your calendar there. 27.75 would be a key level. Now let's now move on to the daily. Well, for right now, and this one came off the 2 hour that here, to me, let's move into the 2 hour to see if we can see some additional confluence on the way there. Not confluence, but some support. I mean, there's a big one right there, right here, which is 28.51. But beyond that, be right there, 28.39. That's not one is right. There we go. That comes in at 28.28. 28.28. There's a little bit more 28.39, but 28.28. So if we break them pretty hard, I'd be looking for a move to 28.28. Yeah, there's some support 28.52, and there'll be a little bit more. But if they break them, I think they're going to go for 28.28 right here. So you have to be conscious and aware of if they break them here. We're going to find some support 28.52, and there's some at 39, but I think they're going to make a trek down to 28.28. Now look at, you see here, come here, we're dilly-dallying around, we rally up, we come back to 28.28, we break below it, but we rotate back, we come back up, and we return right back to 28.28. We make a move up here, we break them lower, where do they come back to? 28.28. I mean, maybe a couple of handles above, and we come back down, make one more move, almost there, but we fall back down. We come back again, where are we at? Back at 28.28. So once again, the people that are using the volume analysis, or you see trying to think of the thing, I used to use it myself. It's good if you're trading the S&Ps, but other markets too. But I'm just saying is that I'm trying to think of the cannot escapes me the name. But anyway, this is we're going to see all this volume coming in. And so this is where the market will work it'll work as a magnet to pull the market down here. So if we get this break here, you're going to see some support at 28.39, probably a little bounce back up, could take you up to about 28.46, 47, and we rotate lower, they're gonna make a run here for 28.28. That's a good volume level right there. Doesn't mean we won't go beyond it. It's just that you're going to see some good short covering coming in. The market will start trying to we'll start to, take up those offers and start, eating those offers, or actually let's say absorbing those offers. And then you'll see the market without breaking, and this would be an area for the market to go and potentially get to. So let's go on and move back into the analysis. Obviously, we're going to go well over the hour. Let's move. Euro yen still holding around 22.75. So dollar CAD. Okay, so the dollar CAD is holding up now. Remember, we had our 34.74. We've fallen as low as what, 34.45. And I think we had support at like 34. I think 34.34. We'll see. When was it? Let's see here. But here's the deal: 34.34. Blake mentioned this yesterday. Is that the dollar CAD will respond to, when the market, you see volatility picking up. I think I forgot who it was. Someone was asking, hey, do you think that we can still go on and this market move higher? And I think that potentially it can move higher. The area where the market will kind of work as a pivot, because if we get past there, I think it's going to take off like gangbusters. It's going to be right there, 35.18, 35.18. So let's go here. This is another market. I would not get in the way of this market now because of that. Because the possibility, once again, we could end up getting, the talks may go great and they get a thing, okay, fine. But once again, I think you have to have like a strategy playbook, and you say, okay, this is where we're going to go. At least that's my mindset, that these talks don't work, or even if they don't fail, but the thinking of the market is that they would. Well, actually, I saw a story. From something research, if you follow NT Markets, they had published it, but they said it's a 75% probability that the talks fail. So once again, like I said, you have to have your playbook. So you want to go, okay, if they do fail, whether they do or they don't, you want to have those targets and levels. And we would be here for a couple hours if we try and play. Well, if they do, they're going to go this way, and if they don't, they don't. I think the volatility is going to be so great that it'd be pretty tough. And if you're trying to scalp it, depending on how far wide your stops are, you've got a probably pretty good chance of getting knocked out of the box, and then ultimately still be right. Now, looking on the downside, where would they find support here? Well, at this point, we'll stay with this, not the 34.34, but we'll go right here with this level, which is 34.48. Let's go with the dollar peso. Here's another market. I posted a chart yesterday, and it's trying to break out, and it could be a lot higher. So the dollar MEX isn't as high as you would normally have thought it, because if you consider what the S&Ps are, it has come back, but it could be a heck of a lot higher. If this thing takes off, this thing will go gangbusters, and it's going to go to 1943 before it runs into any real trouble. I wouldn't stand in the way. What's going to work as a pivot right here is going to be right there, 1928. Once we get past 1928, it'll be a quick shot to 1943, and we may even make it up to 51 if the wheels start to come off the caboose. But for right now, 1928 is going to work like a pivot, in the sense that we get there, you might see the market kind of go like that, and then once it gets past that 1928, then get the heck out of the way. It's going to go to 43 and potentially move to 51. So we'll go to 1928. Support's going to be 1905. Dollar yen. So we got to now 977. I think we pressed below. Yeah, 977 is a key level here on the dollar yen. Let's go here, look on the daily. You can see why we had 977. This is the big pivot. Remember 927? That's the big, big, big pivot right there. That's going to be it right now, and it's going to work like a pivot. So it's going to be 920, 927 right now. And doesn't mean we can't go lower, but I mean from there you'll probably see some value come in. Doesn't mean we won't punch a little bit lower. We might even get down to in the 19s, but it's going to be 927. So look for that, for the market to gravitate to. Upside, well, you know what? Once again, right or wrong, that's the way I'm going to go and try and offer it from this side. Upside means fake headline, fake news story, okay? Fake tweet, 1043. We'll just go right there with that, 1045. Fake tweet headline, 1045. Because here's the deal: if they announced, if let's say they actually announced a deal, it's not going to stop at 1045. It's probably going to make it all the way up to at least 1137. Okay. So once again, 1045, fake headline, fake tweet, resistance. Cash dollar index. Well, it's pretty clear where the pivot is. It's this 97.89. This is just huge. It's huge on a weekly. It's even huge on a monthly. Okay. So, but it's solid as a rock on this weekly. So 97.89, but the pause area is going to be 98.15. 98.15. So you could actually jump to 97.89 and you could take it out easily. Okay. Whether we stay above it is another thing, but we might if we get real risk averse. It's going to be actually going to have to go with this 98.15 right there. It's got to be that right there. 98.15. Let's take a look on the 2-hour. Let's call it 98.20. It's 98 right here, 98.05, but then it comes, it goes 98.10, 98.10. $97.89 is huge, but we can blast through that. It doesn't mean we'll hold it, but we can easily blast through it. And what'll happen is if you got your limit, you're saying, well, this is a huge level. I'll take that on 97.89. But here's the deal: as we start going higher and the market starts coming apart, and you're like, oh my God, I got to jump out. So you end up jumping out at 98.19, only to have the market eventually turn around and come back in. So that's what I'm saying is it's important then that we look at where some of these, to a certain extent, extremes are. Okay, now I don't think 98.10 is extreme. I think 98.10 is where you can get to 98.10 and you might even pop up to 2022 and the market could rotate a little bit lower. But 98.10 is going to basically work kind of like a pivot. It's where the market starts trying to take, if they want to take other sides, we shall see. Support, let's go move back in here. It's going to remain this 97.24, no change there. Crude. Let's move in there. Mm-mm-mm. This is one market that could really trigger some stops. We'll stretch it right there. It's going to be 63. That just seems like so far, but right there. We're going to have to go with that. This is the top of that range. We'll go 62.84. And once again, we're just doing extremes today. Normally, I wouldn't put it up that high, but because crude's so volatile, I think you could trigger some stops and you could have a run up there and then turn around and fall back on its face. Support, once again, we're looking at extremes. Not super extremes on this one, but it's 59.66. 59.66. I think this one could get a little bit wild. If you short crude, I think that'd be a good area to go in. If you see it start falling apart, at least cover some of your position if you get that. Obviously, it might get a lot worse if the wheels really come off the caboose. On to gold. Well, this is just going to work like a trigger. I mean, you could potentially jump up to 1304. But here's the deal is it hasn't responded real well when it's become to equity volatility. And if the dollar strengthens, it's going to try and keep a cap on it. 1293 will work as a trigger, but we'll give it a little bit of room here, and that takes us to 1296. So it's going to be 1296 and 1276. 1296 and 1276. Let's now move into the cross rates. Right there, 86.25. 86.25 for resistance. We'll just go with 85.69. So one of the things we talked about was the importance of these daily levels, and that's where I came up with this 22.64 on the Euro Yen. Jay asked, well, do you think it can come to 2108? Oh, heck yeah. I was just saying that that's a good volume level right there. That was that flash crash. But yeah, ultimately here, once again, going with the volume touches, okay, going with the touches across the body. As I said before, I put my resistance on the body touches, not on the high or the low. How many people sold the high? How many people bought the low? But this is where you see the most volume in here. Same thing plays into the things that the guys and gals who use the volume. I don't know why I can't think of I won't call it a system, but anyway, but that's where you see all the volume. So you hear people talk about the volume at the high, the value at the high, value at the low, whatever. So you can, like I said, that's where and why sometimes I seem to do, okay, stepping in and trying to scalp around is I go with these body touches, and that helps me. And then I'm able to sometimes go and figure out, where a market will go to. The reason I came to 22.64, it's a good daily level. But another thing is that as we were coming in new, at the time when this was making the low, it was coming into a key level. And on top of that, things were bought, as bleak as they can be. But as we get closer to New York, it's going to refresh. And so probably going to make a move. And as I said, probably I'm thinking, and I told you all that earlier at the beginning of the show, I think we'll be in the upper 80s. We could even be higher. But yeah, if it's going to go down here, it's actually the number I've got is 20. It's 2090. And I think, oh, what's it? Oh, he said 2208. Okay, so, but the wheels come off the caboose. I'm looking at this level right there, 2091 or 20 right there, 2091. The wheels come off the caboose. There's some additional support coming in here. We'll look in here, which is that 2245-ish. The next level is right there, 2197, 2197 right there. Let's go and fill that in. We're going to fill that there. That'll be our, you see right there. Right there. That's a very good level too. Right there, look at that. That's a good level, 2197. Very good level. So let's use that as our support. Upside, well, as I said, the way I'm looking at it, the upside is your fake headline, your fake tweet, your fake squawk, whatever. 23.26, 23.26. We can push even higher than that. We're so oversold, but that'll be the first area here. Here's the deal. What would happen is some people would lay off. They go on and start to buy it in here. We could push even higher. We should push this all the way up to 23.46. But let's just go with that 23.26. Right now on the upside, it's going to be 61.14. Once again, one of the reasons we went over the Aussie story, the news story, was because once again they're very susceptible. So we could see some good strong moves on this. So yeah, the first one would be 61.14. Downside support. I think you have to go with these extremes. Well, if they once again the fake headline 59.79. And that's not even a whole lot. We'll move it a little bit lower, just a hair bit lower. 59, it's not even much. 59.71. That's not even much, but it's going to be 59.71. This one takes this to our old friend. This was a key number here too on the daily, and there's also the one on the daily was actually 71.45, I think it was, and we took it out by just a few pips. But it's going to be right now 70.72. 71.45 is a big key daily level here on this. Support. Right there. 68.91. Could even push a little bit lower to right there. Let's go right there. 68.82. 68.82. Aussie yen. Decent volume right there at 76.19. Yep, 76.19, and we're pretty banged up right now. And we can go as low as 75.31, but we'll go 76.19 for right now. It's going to work as a trigger. We've already been pretty well beat up. So if they start to test it, what I'm thinking is if without the headline or whatever, if we start rotating lower, like the S&P's breaking down, okay? So S&P's breaking down, look for some short term to come in around that 76.19. Might press a little bit lower. If the news that we really start to see some real news, and we're gonna fall down to 75.31, but 76.19 should provide some support in here. Look, you see there, 76.19. Once again, uses downside targets. I would not be trying to pick it up at 76.19. We could just blow right through there, but you'd want to be covering that. If the market starts breaking, you can get short and then go for 76.19. But I certainly wouldn't be trying to pick it up and catch a falling knife down there. Oh, it's right there, 77.30, 77.30. Right there's going to be the resistance. And be prepared for some pretty good volatility. So when you come in, you need to have stops, but you have to take into consideration the amount of volatility we'll be encountering. Sterling yen. It's going to be right there at 41.86. Look how well that exponential moving average has been following it. 43.31. Came right into some nice volume right there at 42.59. Oh yeah, right there. 41.81. 41.81 right there. Comes in at 41.83, 81. Tomato. Oh, 41.83. See if we see anything on the 2 hour. call right there 41.62. That's actually 100 pips away, but we'll go with 41.62. What the heck am I doing? Doggone it. There we go. Well, the first area is going to be work like a pivot. It's going to be this 86.82, but it can quickly get up here to 87.12. Remember, 87.12 is that key level on the daily. Let's go with the 87.12 because remember that's key on the daily. 87.12. Support right there, 85.24. For right now, it'll work as a trigger is 81.03. Upside is going to be 81.92. Okay, so there we are with the bias chart. See the euro yen's continue to move up a little higher. Looks like we made up to 80 already. Because things start to even out before we get into New York. So there's the bias chart. I'll get it posted in the room. Good luck, everyone. Once again, the way my approach is going to be, I'm looking for, things breaking lower and focusing on these is really for targets to go to. The market will gravitate to. I wouldn't be catching any falling knives, but do what you want. Peso is on its highs right now. So thanks for joining us here on this extended European crossover webinar, and have a great day.